Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Just a heads up, we're hoping our our connection stays strong during this afternoon as you are on the road today. So as we get things started, let's recap what happened this week in the markets.
If we start on the cattle side, tough week for cattle prices generally. Live cattle down nearly $8 this week. Those feeder cattle auctions were anywhere from steady to $3 higher on the week. On the future side, August feeder cattle futures were down $2.50, and the August live cattle futures contract closed down $1.50. On the beef side of the equation, the choice box beef price was down $57 this week. That actually puts it only $18.50 above where we were a year ago at this time. On the hog side of the equation, barrel and gilt prices this week were down $5. The July lean hog futures contract was down nearly $2.75. The pork cutout value was also lower this week, down $5.60, which actually puts it $13 below year ago levels. And loins were really off on the pork side of the equation, causing that fall in the pork cutout value.
Scott, as we take a look specifically at that choice box beef price, while it did drop significantly again this week, toward the end of this week, it's kind of seemed like it slowed down and those losses have started to slow. Could we maybe be nearing the bottom of this decline?
I sure hope the answer to that question is yes. It seems like we ought to be getting back to where we're somewhere near a bottom. So we certainly need that, just given where we sit today, and certainly hope to keep some pressure off of cattle prices moving forward. But we've come back from those lofty levels, and again, when you look at the annual change now being just 1850 above where we were last year, it might sense to me that we're somewhere near the bottom.
We've been talking a lot about slaughter totals really for the last couple of months. As we take a look at these numbers, we really are starting, and that processing sector is really starting to inch closer to where they were a year ago, or getting much closer to where they were a year ago.
Yeah, that's right. If you look at USDA's estimate for the week ending June 12th on the cattle side, 658,000 head of cattle slaughtered. That's actually 3.5% above where we were a week ago. So keep gaining ground on the cattle side. That's still 1.6% below where we were a year ago. And when you look at year to date, we're down 6.4% in terms of cattle slaughter. On the hog side, for the week ending June 12th, 2.457 million head of hogs. That's 0.6% above a week ago, 0.7 above a year ago level. And we're trailing year to date about 1% on the hog side. So it is a continual improvement back to where we were, really year ago levels in many cases.
Would you say we're still at that break even point where we're not making a huge dent into what had been backed up, or have we made up, or are we starting to make up some ground from those backups from the supply chain disruptions?
So I think we can certainly say we're at least at break even. And I think depending on some of the Saturday runs we see here, we might be slowly eating away at the backlog of animals that we have. We still have a long ways to go, I think, before we can talk about getting through all of that backlog that resulted from the slowdown, shutdown situation that we saw a few weeks ago.
Retail prices came out this week, and as we take a look at those, really some big jumps month over month.
Yeah, some strong jumps in that May retail price data. If we look at the overall consumer price index for beef, it was over 18% above May of 2019, while pork was 7.3% above year ago levels. Even poultry products, 8.8. Certainly showing the results of less supplies as processing slowed down. If we look at a few of the cuts, of boneless round roast, for example, 28% above year ago levels at $6.91. You saw ground beef that was nearly 17% above year ago levels at $4.46. On the other side of the equation, sliced bacon down 8% relative to a year ago at 5.35. Those boneless pork chops, however, were 15% above year ago levels at $4.41.
As we look at those retail prices paired with unemployment and jobless claims in a tighter economy, does that potentially make for or is that a disaster potentially in the making as we look at the domestic demand picture, something that we really need to continue to hold on?
So I think we're going to have to watch that combination of factors that you described very carefully. It certainly could create some problems for us. I will say, I hope we get maybe a little bit of help on the retail price side, i.e. lower retail prices as supply chains have refilled and product more plentiful in stores, but we'll have to wait and see if that plays out or not.
Consumer sentiment also came out this week, and really those preliminary numbers for June shows a little confidence or a little maybe boost in confidence over the previous month.
Yeah, that's right. It's nice to see some increases month over month. The overall index was a little more than 9% higher for the June preliminary results. But both the current economic conditions side of that index it's up 6.7%, and really the index of consumer expectations up 10.9%. All those numbers are movements in the right direction after what was such a drastic decline in consumer sentiment previously. However, I remind us year over year, even though we were stronger, we're still down 20% in that overall index of consumer sentiment. And it's going to matter about jobs and the general economy and additional cases of COVID-19 as we think about where this index goes once we start to see July and August data.
Does the factors, the opening up and being able to be back in restaurants and a drop in retail prices, do those also come into play as well?
I think they do. And I think as we continue to open, it's going to help us on the consumer sentiment side. I think folks are ready to be out. And so I expect more positive to come there as long as we continue to open without seeing too many more cases of COVID-19 that might cause us to go back in more of a shutdown mode.
And there's a couple of states that have shown some of their highest totals this week as they've reopened those parts of the country. So I think that's definitely a little worrisome.
It is, and I always struggle with, I know we're doing additional testing, and sometimes that's going to give us additional cases versus as we're opening, we're getting additional cases. Trying to separate those things is very hard to do, but we'll continue to have to watch that data very carefully.
The big report this week, USDA's latest supply and demand numbers, and while there weren't a lot of changes on the grains side of things, that was not the case as we take a look at those projections from USDA for beef and pork and poultry.
Yeah, that's right. So USDA raised their 2020 production outlook for beef, pork, and chicken. The largest increase was in the beef side, up nearly 1 billion pounds from where they were in May. You now look at their estimates, and they have beef production down 1.8% for 2020 relative to 2019. Pork production up 0.5%, and chicken production up 0.3%. We'll have to continue to watch. So when I look at what they're saying about the fourth quarter of this year, they have beef production down 2.5%, pork production down 4.3%. And chicken production down 1.1%. I'm still curious whether we're going to get those kinds of production cuts as we get to the fourth quarter, or whether we'll have larger supplies as some of these animals that we've held back come to market.
How much are we watching then? We talk about the domestic demand picture, but seeing these kinds of changes and adjustments to production, how vital is it that we continue to see exports grow and more demand for U.S. products?
Yeah, I think it becomes more critical. So you and I talk a lot about risk management at times, and I go, here's a situation where expected production growing from many folks, that's a negative. a domestic economy that's maybe struggling a little bit more. That's a negative. You've got to have something on the other hand. And so the economist in me has maybe some higher exports as the reason to be optimistic.
Do producers also need to take this time right now to look at some risk management and to look ahead to the end of this year and into the first part of 2021?
So I struggle with the answer there. I certainly think folks need to look at what their ability to break even in some of these markets may be. I just highlight there is downside risk available here, or downside risk potential here. And I don't want folks to get caught thinking that we're coming out the other side and everything's going to be great from this point forward. We probably have some fairly large meat supplies coming to market and an unknown domestic economy that worries me about that downside risk.
All right, Scott, that really will do it for us today as we look ahead to next week. Kind of a quiet week, but a pretty big report we're going to look out for.
That's right. We get cattle on feed next Friday, so it'll be curious to see what placements are like in that report.
All right. Have a great weekend. We'll talk to you in a week.
You do the same, Megan.
We have our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can submit questions there, and you can subscribe to that newsletter as well for market updates twice daily. Make sure to check out John Perkins' Market Minute. And for all of the great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.